All right, traders, this is SageFT from the live trading desk, live on YouTube, Monday through Friday, 8 a.m. Let's get it. Let's have the session review for January 24th, 2025. Very, very tight range. Started off in a 17-point range. Waited for all of our signals to fire off before I took a trade. I took one trade today. It was a good one. Waited for everything to go back in line with what we call our KISS chart. Okay, keep it simple, silly chart, which just tells us only trade in the direction of momentum. Right? Find the context. And so what I did is I waited for the tape and the candles to tell me to trade here. Now it looks like, oh, I only made 7 ticks, but when you have a trade copier on, okay, it changes things. I just show the smallest number, the smallest account. Okay, something psychological that I just do, works very, very well. Now the trade of the day is right here, and I missed it. Okay, now I'm going to set it up. There's going to be a clip of it. We're explaining it a few minutes ago, but I want to show it to you on this video again. There's several things that line up here, and I missed it, but it is such a clear example that I can show people in hindsight exactly how to wait and wait and wait and wait for the precise time to execute. And here was that time. First thing that we notice is larger time frame, 15-minute KISS charts up. So we come down to the 20-period simple moving average on the 15-minute chart. Okay, we come down to VPOC. Okay, we go below VWAP. We create what I consider a head and shoulders double bottom. Okay, so if I'm going to find the head and shoulders double bottom, I'm going to find the order block. Here's the first thing. Now, we get a line break at the same time as we get the price and the 8 EMA to cross through the 20-period simple moving average and move the moving average up. Next. But wait, there's more. It gets better. This is the trade of the day. This is the trade of the week in terms of process and confluence. Let's carry on. Okay, now we're going to get into the parts where people really struggle in the ICT world, if you will, right? So if we've established this as a breaker block, which is the neckline, the highest part of the neckline, shoulder, neckline. Okay, this is the head, right? Think of this as Batman or Manta Ray, right? This is the other shoulder, but wait, there's more. What we have is what ICT calls a unicorn. Okay, now this is very powerful because it shows where all the weak players are last in line before they get crushed. Watch this. This is amazing. This video should have 15,000 views in the first 24 hours. Smash that like button. This is the real deal, right? This is real time showing everyone how to actually trade all of this nonsense that's on the internet. I'm showing you. The next thing that happens is we're going to introduce what he calls a fair value gap. Okay, the highest part of this. Okay, it's a 3-bar series right here, right? Okay, now watch. From here to here in these 3 bars, you're going to have a gap. So draw that. But wait, there's more. We have a fair value gap inside a valid breaker block. We get the line break. We get the fractal to turn up. The 8 and price go through the 20 at the same time. 8 and price go through the 20 at the same time, turning the 20 green. But wait, there's more. Next thing we have to do is we have to define what's the risk in the trade. Ah, good. And where would we enter said risk? You should have the information extrapolated from the data that you've collected that the coach gave you the homework to find, knowing that old losing you shorts right here 96% of the time in your testing until you realize to not do it. Now that we know where the losing you trades, don't go, oh, other people lose. No, that's where you lose until you figure out, okay, first thing you do is recognize the unwanted behavior. Then you're going to stop the unwanted behavior. Then you're going to reverse engineer the unwanted behavior. So how would we do that? Watch. We wait for the stop to be created. Folks, this is the most important, this is absolutely the most wonderful video you're ever going to watch on the internet and trading, ever. You wait for the stop to be created. and you wait to figure out where old losing you entered. Okay, so now watch this. Watch. If we shorted 50 and lost money 96% of the time, we're going to go long when it comes back up in here because it's clearly defined our stop at 47.50. So you can see the convergence of 17 different things telling you where to trade. And then the coup de grace is it tells you 47.50, this trade is no longer the same trade. That's your risk. I hope this video reaches 15,000 people in the first 24 hours because this is actual trading. This is the 2-minute chart. You can do this on the 15-minute, the 4-hour, the 1 minute, the 6-minute, the 30-second, the 64 million millisecond for you quants. It's the same pattern again and again and again and again and again and again and again. We wait for our process to repeat. That's going to do it for me. Hit the subscribe button, hit the like button, turn the notification bells on. This is a big video. This is a big video. This video just shared the secret sauce. The question is, can you wait for this setup, or do you have a need to be right and you have a squandering mentality? Okay, if you have an abundance mentality, I'll see you live Monday through Friday on YouTube, 8 a.m. I'll see you there.